I hope you are either enjoying or just recently enjoyed your 3-day Memorial Day holiday. Today, I want to just quickly touch on one of my favorite reports. It comes out quarterly. It comes out from Apollo Global Management. Dr. Torsten Slok is the head author of this report, along with a handful of other folks. And it's really my belief that if you want to gain really good economic literacy around the housing market, then you should study these reports. This report that I'm about to show you, I'm not going to show you the whole report, but I'm going to highlight. It's 121 pages of just data. Charts, data. It's an incredible report. One that you can easily, he gives you full, beautiful, the whole report, that you can use. Freely invites you to use his slides. So I was gonna say full resolution, beautiful charts. Check it out. I can't do it justice. I've tried covering actually the report before, doing all 120 pages, but nobody sticks with me the whole time, so I won't try it this time. The report is broken into 4 sections. The first is housing demand, and the kind of key points from this is home buying plans are softening. He has a chart showing the trend there. Mortgage credit availability is tight. Looks like it's tighter than it's been in decades. Really good chart. Buyer confidence is low. Once again, charts the buyer confidence over the last 30 years. And then long-term demand remains strong due to millennial demographics and household formation. Now, that might be pent-up demand, but there's plenty of demand there. And so you see all the charts that show that and fortify his arguments. The next section is housing supply. Total housing inventory per person remains near historic lows. I don't know if you've seen that data point before, but it's housing per person. What a really good metric to use. Super low. A very high number of new housing units are authorized but not yet started. That is, builders have pulled tons of permits that have been approved, but they're holding off on building the properties, waiting for the markets to improve. Apartment deliveries are about to decline, which will put a lot of upward pressure on rents. Also inflation. It's interesting, you'll see there's a massive ramp up to apartment unit delivery, this year, last year, and that's going to kind of fall in half the next year. And that's going to lead to much tighter supply and higher prices. A significant amount of houses remain off market, and that is vacancies. You can check the vacancy rates for both owner-occupied, investor. They actually have it for apartments too, so you can check that site out if you like it. On home prices, the home price to rent ratio is significantly above 2006 levels. And that is comparing what it costs to own a home versus what it costs to rent a home. It's at as high as it's been in, I think it says it's 2006, but it might be in history. An increasing share of new homes are being built for rent. And that trend line's going like this. It's going straight up right now. Still very, very popular. Buyer traffic is low, and homes are receiving fewer offers, so they track offers by home, they track foot traffic. Really, see, this is if you're in housing and you want a really good foundation, economic foundation about the U.S. housing market, you really need to study this report. And I can tell you there are more than a few housing analysts that we all subscribe to that could benefit spending quite a bit of time with this report. So consumers expect rents to rise, which kind of becomes a self-fulfilling prophecy. And as we already said, the share of houses built for rent is climbing. Now, there's 121 charts and graphs in here, and I highlighted like 40 or 45 that I thought were the most, although all 121 of them are great. I'm not going to go through all 121. I'm going to spare you that. But I do want to just show you the report so you can see it. Here you go. This is the Apollo U.S. Housing Outlook Report. It's for May 2025. I'm just going to slide down to one of the charts just to give you a sense of what kind of data you can get and what they look like. You can see I'm sliding past all these beautiful data, right? I'm going to actually land on this one right here because this we might find surprising. And that is mortgage originations are back at pre-pandemic levels. And they're actually rising significantly for people in their 30s. And so what we do, if we go back here and we look at what are the origination levels in 2018, 2019, let's say right here, by age demographic, they're actually meeting or exceeding those demographics back from 5 years ago. And that's probably a realistic comparison point. So I really like that. I really like that slide. Kind of puts in perspective the market we're in. If you looked at the historical interest rates, we're at a normal spot in interest rates. We're in a normal spot for originations right now. And I know it seems like it's, we're in this horrible market. It's just part of it's our perception, and part of it is that we have overcapacity both in sales and ops still, and that's been right sizing. The thing I just want to just encourage you again, I'm gonna put a link to this report below. Check it out. Use the data. I mean, just study it. We'll all be so much better if we study this. I'm a Dr. Slok, fanboy. I think he does great work. I encourage everybody to follow him. He's one of my top 5 people I follow. I quote him all the time. And so give it a look, give it a try. I did a lengthy LinkedIn post on this today with some other links to stuff. If you get a chance, check out my LinkedIn. I would appreciate that. And then I will put the link to this report, as I said below. I appreciate you giving me some time. I hope you had a great Memorial Day weekend. I look forward to talking to you again soon. Thanks so much.